Hi everyone, I'm Angie. Welcome to my channel. Today we'd like to share an indicator with you. The indicator that everyone strongly asked me to share is called OBV. It is an indicator that the big fund can be observed. The big fund, every move can't escape from the OBV indicator. So if you want to follow in the big fund footsteps, or if you don't want to be hurt by the big fund, then this indicator can help you. If you want to know how to use this indicator, remember watch till the end. You get the most information. So let's get started. First of all, let everyone understand what OBV is. Its name is on balance volume, which is identify energy type. You see it has the word volume in its name, so its calculation formula according to the volume. It is calculated according to the transaction volume. It changes the price, combined with the relationship between the increase and decrease of the transaction volume to speculate market sentiment. Novices always look at prices and experts look at volume. Imagine now, when a stock now at $1, 10,000 people bought. And if 100 people buy a stock at $1, so is there a difference between the two? Of course there is, right? More people buy at that price. It also means that he has stronger resistance or support or a cost zone for most traders. So why say OBV is an indicator that can observe the big fund? It is because when the big fund wants to set up the price, he must collect the ticket. For example, he entered 300,000 tickets. Then when he starts to push the price, he has to sell his ticket. Then the amount will come out. Or when the price is higher, is his ticket sold out or is he just starting to issue tickets? Then these signs will be displayed by the transaction volume. So when you look at the price, quantity is what he likes most. Because there is a quantity, it means someone has followed. Then it will be easier for him to do things. If he collects the ticket for a long time, then when he wants to make a price, no one follow. Then he is screwed, right? So according to OBV, you can see the motivation of big fund by looking at the volume. Then let's talk about how to use OBV. So there will be two lines. The red one is the OBV line, the yellow one is the moving average. So what does OBV look like? You can mainly see the red line. So of course the line is getting higher on behalf of its quantity and price trend are getting higher and higher, getting better and better. Then when the line of OBV falls like this, it means that its trading volume and its price change has no trend. So it will fall. So you see this red line, you can think of it as is an indicator to measure the volume. So how do we use it? The first usage is to cross, then see this OBV line. Golden cross is moving average, is a buying point. So let's see, we put it to the last day. On this day, has it crossed yet? Then when we look at this day, he is already crossed. Shall we see from this day on, this trend is even higher? Because the trading volume means that the big funds are coming in. So we start buying from this day. So when do we sell? Just waiting for this OBV line to break through his MA line. Then the main thing is that everyone can wait until after he break through. It's a broken confirmation. So we sell at this point. Then if you follow this cross trading method, you can gain this big wave. Here he crossed a distance. Let's go in. Then one intersection from here, this day we sell, make it decision. So of course he still lose money. But now I want to tell you a question. That's it. If you use the transaction method of crossing, I just don't think he's particularly reliable. How do you define that? You will buy as soon as he cross over. He looks like this. Step on a little and you buy in. Still have to wait until he looks like this. When there is a larger space, you just enter. Then when break up, you only move when you see this. You exit it when it break down. Or do you have to wait until he has a larger space? Then wait for a larger space. How big is big? Right. We need a way to measure. I can't say that you see big is a selling point. Then your buying and selling point are not particularly accurate. So you are saying, if your go cross, then enter. Then you see here, there are many points. Buy in, buy out, buy in, buy out. No, or all small like this. Or do you see it like this stage? He broke through a little. Are you going to sell at this point? Or do you want to keep going? Do you wait until he gets bigger before you sell it? So how big is big? Is it big to get here or wait until here to be big? Although this method of buying and selling through crossing not so reliable, but he still has his strength. So let's look at this picture. Where do we wish to enter? Of course, we wish we could be entered in the spot. Then this indicator allows us to be closer to the location. Get his bottom. Well, see, did he get a golden cross from here? Right from this day on, we enter here, he can be in. Caught us on this day. If we look back like this, he came from a low point, right? Then he has another benefit. It was before he was in this state of up and downs. He gives you a sign to go. For example, let's see if this is a pull up. Then when he sold it, you say this is a break. You can sell on this day. If you wait until he has more space, for example, today you sell at this point, you can avoid a big fall behind you. So I think it's the indicator, very strong function fall so deep here. But before he fell so deep, OBV has fallen below MA. On this day, if you sell at the close, are you selling this? Then you can also avoid such a big fall, right? Then the second usage of OBV is divergence. Also, I think this index is better. So what is the divergence? That is when the price hits the new low, but the indicator did not follow to a new low. Then the price will go in the OBV opposite position, or the price hits a new high, but the indicator did not follow him to a new high. So mean the price will go in the opposite direction and will fall. We can look at this example. This closing price is higher than before, right? But his OBV is cheaper than before. After that, the stock price fall from here to here. Then this is a deviated state. Then there is a good chance he will be up next. We can look at another example. So we look here. This is a divergence. The price low point of this is here, but its OBV is here. Close at a higher OBV than before. So its OBV should go from here. It should be higher than before, but it's lower than before. So it's a deviation. So the high position deviates from us. You can see this example. So when you look at this, is his closing price here. Then when the next point is his OBV higher than before, a little bit higher. Then his closing price should be about the same as his same height or slightly higher. But this day, his closing price just turned another way here. So this is a deviation. Then he might be down. Let's look at another example. I found an example of comparing action to show you. Let's see this. He was here at this high point. His OBV is here. So now the OBV is higher this day. Shouldn't his day is higher? Here, but he only charges to stay here, lower than the previous one. So it has a diverse state. This is higher. Its price should be higher, but the price is even lower. There will most likely be a trend of up and downs. Okay, so we know how he used it. How do we use it in our what about real transaction? His OBV should be higher, but his OBV is not too high. So reasonable situation next is likely to be a downward trend. Enemy doesn't have much to look at because his turnover is not particularly large. then its accuracy is not particularly high. So OBV is always above its moving average. So if we break through this here, but today buy on this day go cross, there is still an increase. This is the common problem of the golden cross I just mentioned. When you look like this, his average line is very close to OBV. So how do you decide? It's hard for you, isn't it? Then we look into another downtrend. This is much bigger growth. If we use this indicator, can catch it, this OBV and its MA almost at the same level, because before this have no any much volume. When the volume is come, the OBV start turn upper cross. If you guys notice it, then this day you can enter. Then until now, when it break down the MA, here is the selling point. We look into another example, this go cross. On this day, then we follow this indicator. Enter, then the next fall. Is it we want to exit? If this fall did not break through the indicator MA, this is only the big fund flush out retailer action. Then pull down the main force cost. It's not intently want to throw out all the main force ticket. If they want to really exit from all, the OBV will appear dead cross. Again, we mentioned if the OBV didn't show the exit with dead cross, it's much better to continue hold. Now we look into the Tesla counter. On recently, when there is the price fall to the new low, we can notice that this point of OBV line is silent recover. This is already mentioned that the stock price already fall until a bottom level, and also the selling energy already turned weaker. At this moment already can start to monitoring the enter point. There is two types of enter point for this counter. First is go cross for the OBV line with the OBV MA. Second method is when the second bottom form higher on the OBV line with a bullish candlestick. This method of enter strategy can successfully make your profit gain almost 100% just within 2 months. Sharing is until here. If you like the information I share, please click a like on this video. Your like is my motivation to share more stock trading idea here. Next video, I will guide about the MACD strategy. If you don't want to miss the sharing, click a subscribe on this YouTube channel and turn on notification bell. I see you again in the next video. Bye bye.